welcome to the Friday edition of your Daily 5 for August 21st, 2020. I'm Joe Duarte, founder and editor of JoeDuarteTheMoneyOptions.com. I'd like to thank you all for spending the next 10 minutes of your valuable time with me and for your continued support. Today, I want to talk about being at the edge of chaos and 5 crazy proof stocks with extraordinary upside potential. And it may sound like I'm a little bit nutty here, but we are living through some extraordinary times. And so since I've been waiting for this market to slow down for some time, it's actually doing so. And it looks like the dog days of August are finally here. And the price action today in the last few days shows we're having a bit of a downdraft. But although we may enter a consolidation pattern for the short term, I still expect to find stocks with explosive potential. Although that may be a bit more challenging than it has been in recent times, and we may have to be a bit more patient. But the number one reason I'm not totally bearish is because no matter what the Federal Reserve says, they are still going to have to pump money into the banking system, or this highly indebted economy is going to have a lot of trouble. So that favors stocks rising. So we now have some interesting themes and things that are happening. Of course, you know, we're in the dog days of August, volume slows down. Everyone knows that. We have this election and the madness is about to get going here, but the Fed keeps pumping liquidity into the market. COVID-19 reality is setting in. That's a very important theme because it's no longer the lead story. It's now the major underlying influence in public behavior. And so we have these post-COVID-19 consequences. People are leaving major cities. There's a bit of social unrest, but this is having a very positive effect on housing, and it's having a disruptive effect on the workplace and generally the supply and demand equation for everything. So this sets up the potential for us to be able to pick stocks in areas that are gaining benefit from this. Of course, the election, everybody's going to get crazy about this, but let's think about this. The seasonal tendencies are for higher stock prices in the fourth quarter of an election year. So that favors the stock market. So even as things heat up, negative sentiment rises, if we look in the right places at companies that are well positioned, we should be able to pick good stocks. So let's look at the trading principles quickly. We don't want to fight the Fed. We don't want to fight the market momentum and the dominant on the ground trends. The COVID fizzle is a story, but not as a reality. Keep that in mind. Election and reaction to the pandemic, all working into one consolidated set of circumstances that favor stocks if you pick the right areas. So you want to stick with the strong sectors, the strong stocks. You still want to trade in those small lots. You want to take partial profits if you have 20% gainers. You want to keep those sell stops at no more than 5 to 8%. And you want to monitor the lagging sectors for potential turnaround candidates. So let's look at the advanced decline line, the big picture. This is huge. This is what keeps us on the right side of the market. As everyone that follows my work by now knows, I'm about complexity and chaos. Complexity zone is up here. That's good for stocks. We're in the complexity zone. So the trend is up. Chaos zone is where things go badly. We're not close to that. So remember, the trend is up. The edge of chaos is the 50-day moving average and the 200-day moving average. That's where complexity and chaos are just right and things happen. So where are we today? Today, we're looking at the advanced decline line falling below its 20-day moving average. That's a little bit of concern, but not as much as you'd think. The 50-day moving average and the 200-day moving average are the keys, because you can see that when the 50-day moving average is broken by a New York Stock Exchange advanced decline line, like we had here, we had here, and we had here, that's where things happen. Furthermore, if you look at the RSI, which has just hit 50, you want to make sure that that sign of weakness is confirmed by the advanced decline line breaking below the 50-day moving average. So far, it has not. So the uptrend is intact. Furthermore, if you look at ROC, -2 has been a great support area. So if things work out right, we're probably going to have support at the 50-day moving average, -2 in ROC, and we may see RSI fall below 50. But the key is when the RSI falls below 50 and the New York Stock Exchange advanced decline break below the 50-day moving average. Those two things happen. You have a Duarte 50-50 sell signal, and then we're going to get into some trouble. Has not happened yet. Let's look at some stocks. Remember the dominant themes. COVID-19 is no longer the lead story. It is now the underlying fundamental story that is guiding people's lives. So it's influencing their economic decisions, their life decisions, and the markets. So D.R. Horton, the #1 builder in the United States, it's just benefiting from everything that's going on. Low housing supply, low interest rates, people moving out of cities into suburbs and other states. This stock, we got into it in this area. It's up huge. Big earnings report recently, good outlook for the future. And look at the technicals. Accumulation distribution, huge. Unbalanced volume, huge. Momentum steady. It's overbought. Market is in a little bit of a consolidation. So we might get some pullback. Probably a good opportunity to think about buying this stock on the dip. Furthermore, volume by price, no resistance whatsoever, decent support in the general area that you'd expect, 20, 50-day moving average. Next stock, Merck. This is a huge pharmaceutical company. Has very, very little exposure to COVID-19. That means that if its COVID-19 vaccine doesn't really pan out, it's not going to hit it very hard. This is a cancer play because no matter how much damage COVID-19 does, unfortunately, cancer isn't going anywhere, which means that Merck's leading cancer drug, Keytruda, which is expanding its indications, recently got an indication for esophageal cancer. It's the #1 drug against ovarian cancer. It's the #1 drug against lung cancer. This is the kind of stock we want to look at because this is where money's going to be flowing as the COVID-19 dynamic works its way through the system. So again, accumulation distribution starting to sneak up. Unbalanced volume wants to sneak up some more. Little overbought, so it might take some time. But over here, 200-day moving average above the complexity zone and volume by price. If this stock gets above 86, it looks like it can take off. Next, Colgate Palmolive. Again, COVID-19 no longer the story. Behaviors have changed. So Colgate Palmolive is a perfect example. People are washing their hands more. Oral hygiene is important now more than it has been in the past. And this company makes those products that people are going to continue to use now because rightly, they want to do as much as they can to prevent COVID-19. So what we see here, technically, the stock just cleared a nice shelf of resistance. Look at the volume by price, no resistance here, no resistance here, above the 200-day moving average, above the 50-day moving average. Accumulation distribution, unbalanced volume, decent momentum, not quite overbought. Colgate has the potential to move significantly higher, and it will probably do so slowly. It is a dividend stock. It pays a 2.25% yield, but nevertheless, again, a perfect example of the kind of stock we want to get into. Let's look at eBay. I featured this story in the past, and we had a very nice rally from the general area where I recommended it. Had an earnings report that was decent, but it really went too far over a very short period of time, so it's been consolidating. But guess what? Looks as if the consolidation pattern is about to be broken. And if I'm right, it's going to do so to the upside. Let's look at a couple of things here. Look at these green bands here. Of course, everyone knows these are Bollinger Bands. These things are shrinking. That means that a big move is coming because decreased volatility usually precedes a big move. So what's the big move likely to be? To the upside if the volume picks up a little bit. So right now, I own this stock. I recommended it. I'm waiting for volume to pick up. Nevertheless, unbalanced volume is steady. Accumulation distribution looks like it's ready to turn up. Here's the best thing about it. It's not anywhere near overbought. And volume by price has okay support, which is good, but no resistance overhead. It means under the right circumstances, this stock could move significantly higher. I want to look at this stock in some detail because more than anything else, Carmax, okay, this is the largest used car dealer in the country. Now it's benefiting from this underlying behavioral change. People are starting to avoid mass transit because they don't want to be infected with COVID-19. And what that means is that Carmax's sales are going to be slowly and steadily and perhaps explosively increasing. Plus, the supply of used cars is starting to shrink because people are starting to buy them very aggressively. And that means that now they're going to have some pricing power. So Carmax could be a huge beneficiary of this massive behavioral change that we're experiencing due to COVID-19. So let's look at this stock as usual. Technically, above the 200-day moving average, above the 50-day moving average, in the complexity zone. But here's what's important. If you apply an old technical rule called the swing rule, you look at the bottom of the stocks around 40, you look at the resistance of about 100. So that's a 60-point swing. If the swing rule holds up, this stock could, and I'm saying could because these things aren't always perfect, but this thing has the potential to move to the 150, 160 area based on the swing rule. A lot has to happen for that. But right now, it's looking as if it's ready to break out. Again, volume by price, it has cleared this huge shelf over here of resistance. The volume, this is August, so I'm not sure that we are having a reliable volume signal here. But look at it. Steady, increasing. Lately, not so much. But the best part about it is up days, big volume, down days, little volume. Unbalanced volume up, accumulation distribution up, a little bit overbought, so it could slow down. That's all I have for today. But let me tell you, as always, if you focus on companies whose stocks sport good-looking charts, where management is doing the right thing, if you understand the underlying dynamics of people's behavior and where they're putting their money, you're going to be able to pick stocks more accurately than you would by using only technical analysis. I'm primarily a technician, but I like to have good fundamental support for why the chart is looking good. I'm Joe Duarte. I want to thank you for watching. Check out my best-selling book, Trading Options for Dummies. Consider a free trial on my website. Full disclosure, I recommended DHI, Merck, Colgate Palmolive, eBay, and Carmax on Joe Duarte and moneyoptions.com recently. I own shares in the company. I look forward to our next visit right here on your Daily 5. I recommend also watching my second half forecast called Taming the Uncertainty on StockCharts TV and YouTube. And we'll definitely talk again. Have a great day.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.